Welcome, everybody. I am super excited to have Karlee with me today. We are going to chat about mortgages, talk about what is going on in the mortgage world, the real estate world. There's a lot of chaos and confusion going on, and we are here as the professionals to help guide you and to lead you to making well-educated decisions. And so, Karlee, if you want to just introduce yourself quickly, and then we will just kind of have a conversation about what's going on in the world.
Awesome. Well, sure. Thanks for having me, Michelle. Excited to chat with you. My name's Karlee. I'm a mortgage broker. I'm based out of Picton, but I service, I'm licensed for all of Ontario, but largely service, the Belleville, Trenton, Quinte, Prince Edward County area, Napanee a little bit as well. I'm pretty lucky. Although I run my own sort of business as a mortgage broker, I hang my license with George Moore Mortgage Services, which is my dad. So he's my principal broker. So it's a family business. We also have my twin sister who's licensed, who works for the brokerage too. So we've got lots of knowledge, lots of experience to lean on. And what I love to do is just kind of get to know my clients and their financial picture, their financial goals, and then we match them with different mortgage, either strategies, solutions to help them with their mortgage financing.
I think that's really important when you're in a profession like we are, where we cater the solutions to the client. And I think there is just not one size fits all for everybody going through a real estate transaction. So it's really amazing to be working with people like yourself who take pride in making, customized approaches to a real estate transaction, because there's so much going on in the world. And we were talking, the election in the United States is today, and I think that will bear some weight on our industry, because it seems like everything the states does, it affects Canada in some way, shape, or form. um
Yeah.
so so what do you find are the most challenging, what do you find buyers and sellers are being challenged with right now in regards to navigating this market? Because I know personally, buyers aren't really sure what they need to do. Like, they're not sure if now is a good time or if they should wait until December 15th when these, new rules come out. Or the sellers are like, well, is the spring going to be better? Am I going to get more money? Like, what are you seeing?
It's a great question. And I often find I get this question a lot, like what should I do? And my answer kind of goes back to what you initially said, where there's not just one solution for each person, right? There's no recipe for a mortgage. Like you could follow a recipe for home buying and selling in a mortgage, but it doesn't necessarily mean it's going to work the best for you or for that particular person, right? So it's really looking at what's best for me in this situation. As if I'm a buyer, I think the biggest piece of the puzzle right now is affordability, because we have seen interest rates obviously be on the higher side. They have come down over the last little bit, but they're still a little bit higher. And when interest rates are higher, it makes affordability tricky in terms of you're spending more on other things outside of the home, but as well, your mortgage payment is increased. So you really have to look at, can I afford this? Does it work with my personal budget? And that's a big thing for what I do is we build our clients custom mortgage budgets that helps them break down all the costs associated, particularly that affordability piece, that your mortgage payment, your property taxes. If they're a first time home buyer, they may forget about the fact that there's going to be home insurance and utility costs and all the extra things that go with it. So it's really
Mhm.
looking at, can I afford this? Does it work for me right now? And does it work for my long-term goals too? And once you kind of start small and look at those sort of micro budgets and what's going to work for you, you can kind of build from there and decide, is it the right time or not? And outside of that, just from a mortgage perspective, offering the most amount of flexibility in a time like this is crucial, especially to avoid any big penalties down the road if clients choose to break their mortgage. So you could look at variable rates, or you could look at a shorter term fix. There's different strategies you can bring in to make sure that you have flexibility, you have that affordability, and you can decide if it's the right time to buy or sell right now.
Right, right, yeah. there's so many, and that's the thing, right? Everybody is in a different place. Even as first-time home buyers, you may be, sorry, my dogs. Um, you may have savings, and you may have a really good down payment. And sometimes when the affordability is lower based on what you were hoping for, sometimes there's different things that you want to do with that down payment. Like, do you utilize it all? Do you not? There's so many factors to take into consideration. Now, one thing that buyers need to know about that I feel is super important is to know about the first home savings account. This is something that I think benefits all buyers, and like first time home buyers, obviously. But it benefits them from a tax-free savings approach. What are your thoughts on the first home savings account?
Yeah, it's a really good product. Sometimes the government comes out with these interesting incentives for first-time buyers, and they're not always maybe the best product or incentive. But this one I think is actually really good because the way it works is kind of like a combination between an RRSP and a TFSA. So any income that you contribute to the first home savings account is going to be tax deductible. So you save a little bit on taxes. If you get a return, you can add it back into that first home savings account. And then, like a TFSA, any growth that occurs in the first home savings account, so it's not just a savings account, you can invest in it, and in any growth that you or any money earned there, you don't pay taxes on that, right? It's tax free. So, and you can pull it all out to use towards down payment, closing costs on your first home. So it's a really good product. And the one trick with the first home savings account where it is unlike the TFSA is that TFSA, your contribution room starts when you're 18. A first home savings account, the contribution room doesn't start until you open that account. So if
Right.
you're, a young person thinking about purchasing a home, start that first home savings account, get it opened. Even if you're only contributing, $10 a year or something, at least you've got it open. That's going to increase your contribution room so that you can have a higher amount in there. And then if you're familiar with the home buyers plan under the RSP, in this plan, you can withdraw up to $60,000 out of your RRSP to go towards down payment and closing costs. But the caveat with this program is that you have to actually repay those funds over the next 15 years in
Right.
order to not have a tax penalty. Whereas with the
Right.
first home savings account, you do not have to repay it. So it's kind of a nice product to go with to kind of give yourself that flexibility there. So
For sure.
I like it. Have you seen people being interested in it? Any of your buyers kind of had questions
Yeah,
about it?
I have. Yeah, for when I first learned about it, I had mentioned it to my brother because he was just purchasing, and he's like, I had no idea about this, and I was like, well, even though you essentially, because he was already like in the midst of buying, but he did end up opening it and was able to contribute that $8,000 because you have $8,000 per year. So I mean, having that tax benefit is better than having no tax benefit, I guess is how I see it. But even as like a parent of well, my son is only 13, my daughter's 5. But as a parent of a young adult, even having this information is super valuable because if they are 18 and they do have money saved, or you can encourage them to be putting money away um, to help promote their first home, essentially. I think as parents, we need to be promoting that type of savings because I think it's going to help them in their future be able to realize, like, I really, can even with just like the contribution and then the growth available to them, right? Like that shows them how the compound effect over the because I think it's 15 years that they can have it open. Is that right?
Not sure offhand. I think that sounds about right.
Yeah.
Yeah, but I'm not sure offhand on that
Yeah,
one.
I'm pretty sure it's 15 years. I believe it can be opened. And I believe it's from like the age of 18 to like, I want to say 71 or something.
Okay.
So like the sooner the better, anyways. Like I know that when my son Jaden, when he turns 18, it's like, okay, let's get this account open and start contributing to it because why not max it out? And the contribution total is 40,000, correct? I'm pretty sure it's 40,000.
Yeah. Yeah.
Yeah, so why not utilize that? But yeah, I do have a lot of buyers that are at least starting to put money into it. I mean, it's just going to benefit them at tax time and everything, right? So,
Yeah, and even for parents, if they are planning to gift funds to their child for a down payment, it's an account that they can contribute to for their kids, right? If it's opened under their
right.
kid's name, you can contribute to that. And this is probably a better question for an accountant, but I believe you can defer the tax benefits until you need them as well. So don't quote me on that. Check with
Yep.
an accountant, but I do believe because oftentimes when you're young, you're in school, you're probably getting a return anyways. So, but if you can defer those tax benefits to when you have a salary, it might make a bigger difference.
Mhm.
So that's
Yeah.
something to look into.
For sure. Yeah. And I do think so. There's also some changes happening on December 15th when it comes to first time home buyers. Do you want to maybe go into that a little bit just to clarify for some home buyer? A lot of this is first time home buyers, but it's there to benefit you essentially. So it's um good to know about what's coming and just the information. It's
Totally.
a valuable tool.
Yeah, absolutely. Yeah, some big changes for sure, and some of them are not just for first-time homebuyers, which is kind of nice. So on December 15th, we'll see some new mortgage rules. One being that the mortgage cap on insured mortgages the purchase price will go from 1 million up to 1.5 million, and that's available to everyone, not just first-time homebuyers. And then for first time home buyers, we can now qualify you on a 30-year amortization versus a 25-year. So that's going to do two things. One, it can slash your mortgage payment, so making it more affordable for you. Or two, it can increase what you qualify for by about 6% or so. So oftentimes, yeah, which is nice. Oftentimes with first time buyers, you're typically, this is all obviously a generalization, but typically you're kind of starting out in life. Your salary may not be super, super high yet. So you're kind of looking at usually the sub 500,000 price point. This isn't always
Mhm.
right, but
Yep.
oftentimes it is. And so you're usually looking at your maximum debt service amount, so the maximum that you can qualify for. So by extending this amortization, it's actually going to help you qualify for a little bit more of a mortgage, which is going to help you be a little bit more competitive in the market, or maybe find a few more homes that are in your price point. So I think it's going to be some big changes and have a nice impact. And then I think the third change is that on anyone purchasing a new build, you can qualify on a 30-year amortization now. So
Right.
that's I don't think that's just for no, that's everyone. That's not
Yeah,
just
I
for
think it's everyone.
yeah. Yeah. So that's good too for, trying to get that demand for new construction going, because we know we need more houses here in Ontario and in Canada. So I think that
For
was the
sure.
government's push to try and, spur some demand.
Encourage.
Yeah.
Yeah, for sure. Yeah, I do think that these changes will be beneficial to buyers. Now, obviously, with the 30-year amortization, you're paying more in interest, obviously, if you are looking at it in that perspective, I think. Um, but none of us really want to be paying our mortgage for that long if we can pay it
Yeah.
off sooner.
And I always say I always say, like, just because you take a 30-year amortization doesn't mean that you have to stay there. So what I recommend is use your prepayment privileges. Most mortgages come with prepayment privileges where you can do either lump sum payments, or increase your payment amount or increase your payment frequency. So although you may set it for a 30-year amortization, you can mimic a 25-year or less by taking advantage of these prepayment privileges. So
Right.
you're right. The argument is, well, then you pay more interest, but not necessarily. There are tips and tricks you can do that are super easy to set in place, and we can help you break down those numbers to mimic that 25-year or less amortization, and you get that paid off as soon as you can, which feels good. And then in other instances, it can make sense to have a mortgage and take that 30-year amortization. For example, like real estate investors, if they're purchasing additional properties, we have to factor in their mortgage payment on any property that they have into the debt servicing to see, and that will impact their qualification room on a new purchase or a new rental purchase. So by taking that 30-year amortization, it's going to knock down your mortgage payment on paper, which is going to help you qualify for more. So there are times
Yeah.
when um, to that longer amortization can be really, really beneficial.
Yeah, and that's the thing, you need to be able to sit down with somebody like Karlee to be able to look at these numbers and manipulate them and look at different scenarios to be able to see the benefits and see like, okay, if our mortgage is this, this is what that looks like, but if we do our mortgage at this is what this looks like. There's
Yeah,
so many, different options to look at, but being able to look at those options is what you need to be able to do to actually be able to make an informed decision instead of just it drives me insane when I hear about buyers saying that, "Oh, yeah, I'm pre-approved for this." "Oh, okay. Do you have a formal pre-approval? Who are you working with?" And it's just like, "Oh, I just did that pre-approval thing online." And it's like, "No,
not
that is not a
good.
pre-approval."
Yeah,
So,
yeah. It's tricky, right? And like I certainly am one of the brokers that requests as many documents as possible up front because when I offer my pre-approval, I want you to feel confident in that, and that means that I've taken a look at all the documents. And sometimes it's hard for people to wrap their minds around that, but with mortgages, it's a lender offering you a lot of money, and they need to make sure that their asset and their that they are protected, that their funds are protected. But they also have a lot of regulations they have to follow because they are so heavily regulated. So they will qualify mortgages and income very differently. So if someone tells me, "Oh, I make $30,000 a year," I have to ask, "What? How? Like, is it paid? Are you self-employed? Are you paid by a salary? Are you hourly?" And so breaking the specifics of it down, it could sometimes be a pain in the butt for the client, right? Because you're asking a lot of questions and collecting a lot of documentation. But at the end of the day, that pre-approval is going to be that much more accurate if we have as much information as we can up front to ensure that we are being accurate and underwriting as closely as possible for them.
yeah, for sure. Yeah, and that's the thing with buyers, this is a new journey. This is something that they've not done before, and so there are a lot of documents that are required, T4s and employment letters and income statements and all of those things. But that is totally standard. And I often have to have this conversation with buyers to kind of prepare them if they've not already been working with somebody at this point, is that you are going to be required to provide a lot of documentation. But once they have it, they have it. It's not a huge deal after the fact, even if you are looking for 6, 8 months. There'll be a few changes here and there, but for the most part, the foundation is laid and you kind of have a good, solid foundation to go off of.
Yeah,
Um,
yeah. Yeah,
yeah,
and it can be overwhelming, right, to see the
yeah,
list of documents requested and to chip away at it. And I know like we're here to help, and all mortgage brokers, well, I shouldn't say all, but I'm sure most mortgage brokers are here to help, and we try to make it as easy as possible for you. We have different resources to check into what documents are, why we need them. We will reach out to your accountant with your permission to get documents from them. If we can lighten your load in any way, we're happy to help. But ultimately, there's not a lot of support we can do in terms of getting documentation because we have to get it from you, right?
yep,
So, but I do know it can be really overwhelming. And it seems to just be getting, may I say, worse. Like it's banks and lenders need more and more and more. So,
yep,
uh, it's definitely when I have an initial call with a client, that's definitely one of the things I touch on is just heads up. This is a document heavy process, and we're here to help you, but it can
yep,
feel overwhelming. It's unfortunately just the way it goes these days,
yep.
but yeah. But you're right, once you get through the bulk of the heavy lifting, then it's a little more smooth sailing from there.
Yeah, for sure. And I even let buyers know, like when they're putting a deposit down, even like for FinTrack, for me, like I have to ask for account numbers and
Yeah.
banking information, and so that is totally standard, and I'm not just asking for my own information. In fact, I don't care. It's the government, and I always joke about how I'm surprised that they don't ask for DNA samples or blood samples at this
Yeah.
point because they're pretty well there.
Oh yeah, 100%. Yeah. Yeah, it can
Um,
always be like a little awkward, right? Because you don't necessarily want to ask for all this stuff, but you
yeah,
kind of got to do it, right? So we got to do it, get
definitely.
compliant.
What are I made a note because I was like, this is always a good one, and I love to hear people's answers to this. Is what are the three biggest mistakes that you see people make that have like kiboshed the deal or like totally messed everything up and been like, had you just known or had you just listened and not done this, you know, have you ever had a deal fall apart because someone went and bought like a new car or something stupid? Like I have.
I actually recently had one where um, a debt was not disclosed to me. So it wasn't showing on the credit bureau when we reviewed liabilities together. It wasn't disclosed to me. But then once they submitted down payment documentation, it showed a loan payment. And so things like that, like just disclose with your broker or whoever you're working with what if asked about liabilities, and extra ones that aren't reporting to the bureau, disclose, because that can just, it only hurts you in the end, right?
Yeah.
um, and then of course, yeah, someone buying a truck or having a car payment, oftentimes that is something that I will mention to my, especially first time buyers or anyone doing a pre-approval. I have a line in their budget about, here are all the factors that can impact your pre-approval. So, but
Mhm.
particularly is if you're, having any additional liabilities. So you finance a new vehicle, or even maybe once you have an accepted offer, you've got your financing in place, but then you decide, well, we need a new couch, so we're going to finance that. Well, that can come and hurt you too. So just, I would
Yeah.
say, wait till your closing date to quit your job and make any big purchases, right?
Yes.
We want to make sure no impact there. And then the third one, and this one is really surprising. It hasn't certainly hasn't killed any deals, but it's added an extra couple layers to my process. But property taxes on a property have actually a pretty big impact on the mortgage qualification, and debt servicing. So when I issue a pre-approval, I do plug in sort of a 1% or 0.75% of the property purchase price factored in as property taxes. But if it's higher than that on the real property, then that can actually, if you're working at the high end of your debt servicing ratios, that can push you over the edge. So it's really important that realtors put the proper property taxes, or the most up-to-date ones, on their listing, so that we're pulling the most accurate numbers. But I also will
Mhm.
usually double check that with the municipality or tax rates and stuff, just to make sure, because otherwise either clients have to come up with a higher down payment or they can't go
Yeah.
forward on the deal. So that's a kind of a
Mhm.
surprising one. And I always get my clients to send me the homes that they're interested in too. So once we've got a pre-approval in place, they're out house hunting, either their realtor or they can send me the address, and then I can plug in the specific numbers, even if they're not moving forward on that property, but they're curious about it. At least they'll know, yep, it's going to work with these property taxes. Here's what the mortgage payment would look like and stuff like that. So, yeah, so that property tax piece is kind of a surprising one, but it does kind of
Yeah.
play a big role.
I do think too that people need to realize that they're marrying the payment, right? What's that like? There used to be a saying that I would hear all the time about you're marrying the payment, not the house or something. But
Yeah.
it's like it's the payment that you have to like that you're committed to, right? So that's the most important part of it is making sure that that payment is something that you can manage, right?
Yeah, because the rate's going to change, right? If you're in a 25 or 30-year amortization, that's going to change 5 or 6 times if you lock in for a 5 year. So the rate's going to change. So you're right. It's that payment piece. Are you comfortable with that? Are you comfortable? Is that going to fit with your personal budget? I think that's honestly the biggest piece of the puzzle right now. Um, we can always shop around for better rates for you. We monitor your rate even after closing, so you'll know you're in the best interest rate. You don't have to worry too much about that. We want you to sleep at night not thinking about your mortgage, but
Yes,
that payment piece is your responsibility. You've got to make sure you can make that payment, and that you're comfortable with it for sure.
for sure. Yeah. Yeah, no, that's such an important element. And another time we'll have to talk about credit because credit, I know,
Mm.
like the credit score obviously is a big element to the pre-approval as well. Like you could have a great income and you can have all these things, but if you've not really taken good care of your credit, that's also um, something that could affect you, right?
Yeah, great point. And sometimes there's just some little tweaks you can do to boost that score up, right? So
Mhm.
certainly that would be a good conversation for us to chat about,
For
definitely.
sure. Yeah. Well, I'm glad to have you on today. It was very informative and very good to have this information. And I just do believe that it's just a matter of people being able to have this information to make educated decisions. And that's why we're here, is to help you make those educated decisions. So myself as a realtor and Karlee as a mortgage broker, we are here and available to help support you in any way that we can. Down below, we will make sure that our contact information is available so that you can reach out to us at any time with any of your questions, or comment below with your questions, and we'll make sure that we get the answers to you. That Yeah. So I appreciate you coming on today, and we'll definitely do it again.
Awesome. Yeah, thanks so much for having me, Michelle. And I love your educational approach. I think that's key. And if anyone has questions, always reach out. I love questions, especially talking about mortgages. So
Yeah.
hit me up.
Awesome. Thanks.